Hello traders, in yesterday's video I told that I expect the range for this week to be between 15,500 to 16,200. Now what is happening is both the Nifty and Bank Nifty is dancing to global cues, and that is not new. We have been seeing this for a quite long time, which we told in yesterday's video as well. Now you forget what I told. We conducted a poll in our Telegram group. Out of 259 votes, 41% are bearish and only 26% are bullish. Balance 33% said they don't have any idea about the direction of the market. So what do you understand? Majority of the people are bearish, right? So if you want more insight like this, please feel free to join our Telegram group, for which the link is on the description below. Now I'll get back to the point. Let us say we want the markets to go up. Why do we want the markets to go up? Or let's say we want the markets to go down. Why do we want the markets to go down? Is it like market should behave what I think, or because I have returned call, so I am desperately wanting the markets to go down, or I have returned put, so I am desperately wanting the markets to go up? No, that shouldn't be correct. That is not fair at all. As a content creator, I have some responsibilities and I should be telling the facts rather than dictating how the market should behave. And that is unethical. Now I have been telling for a very long time that I am bearish, and and I still stand by that. And I am saying again and again, sell every rise in the market. And some people don't like that. They unsubscribe. Not an issue, no problem at all. It's up to you whether you want to subscribe or unsubscribe. But I will be telling the facts, and if I am wrong, I accept my mistake, and I agree that I have failed, and I have every right to be wrong. Now, having said that, what is ahead of us, or what is going to be the market trajectory? Now, markets need some news, if it wants to go up or down. Until we don't have any big news, whether it is positive or negative, or our markets are going to follow the mother market, which is the US markets. Now, what is happening in the US market is, if you see stock futures contracts tied to three major indices, which is Dow, Nasdaq and S&P, were up roughly 0.5% on Monday, putting the Wall Street on track to extend gains as investors continue to access the outlook for monetary policy, in spite of signs showing slowing growth and easing commodity prices also last week, right? You know, several commodity prices are down, and several economic indicators, including global PMIs and consumer confidence, pointed to a slower economic activity, bringing many speculation that central banks may not increase the interest rate as expected. Not only that, a slump in commodity prices is also adding the bullish sentiment, with the falling grains, metals and energy prices easing worries of prolonged inflation. Last week, the Dow, if you see the last week, Dow Jones bounced more than 5.4%. The S&P 500 rallied 6.5%. And Nasdaq also surged more than 8%. Now that is the sentiment of the US market. Majority believe that the Federal Reserve may not increase the interest rate as anticipated. They may slow down. That's why US markets have gone up. Now, we have to wait till next federal meeting for the outcome. Until then, we might consolidate and follow the US market. That is what is my expectation. So if you see our markets, of course, as I told you, we are just following the mother market, which is the US market. But what does our open interest, or whatever open interest says, is that there is significant put writing across the board. People are writing even from 15,500 to 15,700 put option is being written. But the problem is, as I told you, we have to cross 16,000 first, then there is a good resistance at 16,200. Whether we are going to cross it or not, we will have to wait for the price action to come out, and of course we will have to get positive news from global cues also. And as I talk to you, this US futures are also volatile as usual. Like when our markets were closing, US futures were up by around 200 points, but now it is flat, almost flat. Dow future is flat, S&P is flat, Nasdaq is flat, and FTSE is trading largely in the green. In fact, it was trading more than 50 or 60 points when we closed. Now it is up by 40 points. So you can understand that markets are really flat and volatile, whether it is futures or spot price. When it comes to US markets, everything is volatile, right? So we will also continue to be volatile, and even today markets were highly volatile. All day long it was trying to move above 16,000, but bears were super strong and they were not allowing the markets to cross above 16,000, right? Now this kind of situation, like we had a gap up, right? What happened is market were able to sustain the gaps. So the gap which we formed today was sustained. So whether if it is going to sustain till this month expiry, or it is not going to sustain, or it is going to gap down tomorrow, we really don't know. But markets are, as I told you in our previous video, markets are really going to be super choppy, and we will have to wait. We will have to get support from our big brothers, which we are not getting. That is the problem here. Our big brothers who are FIIs, as I told you yesterday, they have offloaded more than 80% of what they have bought in the financial year 2021, right? So let's wait and see, and let me also check if FII data has come. If I'm sure they would have sold at least around 2,000 or 2,500 crores. That's what they have been doing. Yeah, till now the FII data has not yet come. So once they come, I think somebody will post it in our Telegram group, and I'm sure they would have sold. That's what they have been doing, and they will continue to do that, right? So you will have to be careful about the market. Many people are talking about recession, and we have told this very, very long time back that there might be a recession, and people are talking. In fact, the last meeting when Jerome Powell went to Congress and told that recession is inevitable. So if US is hit by recession, we will also follow, I think. But we don't know how it is going to react, or how Indian markets are going to react. We'll wait and see. Fingers crossed. We cannot predict very ultra long term. We are not even able to predict short term nowadays. How can we predict ultra long term? So we'll leave that apart, and we will focus at least till now, which is next expiry or this month expiry. So this month expiry, I expect the market to be closing between 16,200 to 15,500. And we will also check what is happening when it comes to Bank Nifty, right? So Bank Nifty, if you see HDFC, Axis Bank, everything, actually HDFC, there is a heavy call rating in Bank Nifty. So if you see that, I think 34,000 is going to be a super strong resistance in Bank Nifty. And in fact, there were call unwinding today in Bank Nifty. So you work out what is going to be your appetite, how you are going to take risk, and plan your trades accordingly, and also make sure you hedge your positions. Anything can go wrong. If things go wrong, you will be in great danger, and your capital will be damaged drastically. So it is best idea always to hedge your position. Don't take overnight positions without any hedge, right? So I think I have told whatever is available to me in this video. Thank you for watching. Take care. Bye.